Today, Binance asks Australia to cancel its operational license. New York's financial regulator shoots down the notion Signature was closed over its crypto business. And we explain what's coming with Ethereum's next big upgrade, Shanghai. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices are mixed ahead of key jobs data out tomorrow morning. As of noon Eastern, Bitcoin rose slightly, trading above $28,000. Ether dipped to $1,800, and Polygon traded around $1.12. Okay, let's talk about the top stories. First, Binance just asked Australia's securities regulator to cancel its derivatives license. The move means, starting April 14th, derivatives clients won't be able to open or increase their trading positions. Then by April 21st, Binance will have to close any remaining positions. Derivatives let traders bet on the price of crypto assets without having to actually own them. The Australian Securities and Investments Commission, or ASIC, started a targeted review of Binance's derivatives business back in February after the company said some customers could be wrongly classified as wholesale investors, which lets them access more sophisticated financial products. Next, the head of New York State's top financial regulator is hitting back at claims that Signature was shut down over its crypto business. According to the Wall Street Journal, Adrienne Harris, superintendent of the New York State Department of Financial Services, said at a New York conference it's, quote, ludicrous that the closure was about crypto. She also rejected the theory that regulators are orchestrating another Operation Choke Point, an initiative of the Obama administration that sought to crack down on high-risk businesses by pressuring banks to stop doing business with them. On March 12th, the Signature was closed and all deposits were made whole by the FDIC, who also stepped in to prop up customers at Silicon Valley Bank. Just this week, crypto customers faced a deadline to pull out of the rest of their deposits. All right, on to our main story. Ethereum's next big upgrade, the Shanghai hard fork, is right around the corner. Crypto World's Talia Kaplan breaks down what you can expect.
The world's second largest cryptocurrency underwent a huge change last year, the merge. That's when Ethereum successfully transitioned to proof of stake. And now, more than half a year later, the protocol's ready for its next major upgrade, Shanghai.
This is going to be perhaps the most important market event of the year, and it might well fundamentally alter Ethereum's price dynamics.
To understand exactly what's about to happen, let's first explain the process of staking, the new way of validating transactions that take place on Ethereum's blockchain.
Most people are familiar with proof of work mining, so people spending electricity and computing hardware in exchange for the native token, Bitcoin, if they validate a block. And now Ethereum has transitioned to something called proof of stake. And what that means is that people who just hold the token, they own some Ether, are able to lock that asset up effectively into a bond with the protocol, and then take turns validating transactions. And in exchange for that, they receive some ETH based on how many transactions took place during that time, plus the monetary policy of that protocol. And so you can generate yield just by holding the asset and helping secure the network.
Brian Mossoff is the CEO of Ether Capital, and he says this is really attractive if you can take a long-term view. For those who can't, there's some good news. The long-awaited Shanghai upgrade will allow users to finally unlock their staked ETH. Back in December 2020, Ethereum developers created the Beacon chain, which was initially used to test proof of stake. People who wanted to become validators had to stake ETH without being able to withdraw it for years.
The Shanghai hard fork is really exciting. It's kind of the last piece of this upgrade that starts from the launch of a proof of stake network, the merge of the original proof of work chain into the proof of stake consensus mechanism. And now the question is, if you stake your Ether, can you get liquidity and the ability to withdraw that staked Ether? And to date, you haven't been able to do that last piece. You've been able to stake your assets, you've been able to generate a yield, but if you wanted to sell any of it, you can't. So the Shanghai upgrade is about getting liquidity on that staked ETH, the ability to withdraw.
Right now, more than 17.5 million staked Ether, worth more than $30 billion at recent prices, simply can't be accessed on the network. But that ETH earns a yield. Now, the main focus of Shanghai is the Ethereum Improvement Proposal, or EIP 4895. According to Ethereum.org, EIPs are standards specifying potential new features or processes for the network and play a role in how changes happen and are documented. What does this next upgrade mean for investors?
I think investors or funds that haven't figured out how to offer that product either internally or externally, now that last missing piece of, hey, when will we get liquidity if we ever need to wind down the fund or sell some of the assets, that piece of the puzzle will be in place. So I think that's a good thing for more investors, whether they're retail or institutional. This is an important upgrade that's been much desired and long awaited.
Developers have been working on the Ethereum upgrade for months and have already been delayed from March to April.
When people say, I don't understand why this takes so long, why didn't they just put that into previous upgrades? Developers are all about minimizing risk. And the more things you put into an upgrade, the higher the risk that there's a bug in some line of code that you don't see and something really bad happens. There's no room for error here. You can't just reboot the network and say, well, we'll start again and hope everyone comes back. The trust will be gone. So developers will do these upgrades when they feel it's appropriate, that it's been tested enough, then they'll push it out.
The expectation is that when Shanghai launches, it could kick off a wave of withdrawals.
Currently, there's a big debate going on between analysts and researchers about how EIP 4895 will impact price. One theory is that a successful network upgrade will actually get more people to deposit because there are investors who are simply waiting on validation of technical success before depositing their Ether. If that's true, obviously it will reduce the amount of circulating Ether at a time when the Ether supply is already shrinking due to burns. And obviously this would buoy price. Conversely, however, there is this issue of what if more Ether enters into circulation? There's a huge amount of Ether staked, I believe over 17.5 million ETH, which would be a top 5 cryptocurrency in its own right. Just the amount of Ether in the staking contract, that will hypothetically be able to be withdrawn and sold, which would create a massive headwind for the asset, potentially right at the dawn of a new bull market. Ultimately, however, I think on a long enough time horizon, I expect that proof of stake is going to entice investors who are looking for real yield. It's going to make Ethereum a much more attractive asset. We just need to see who is withdrawing, what they're withdrawing. Are they withdrawing their full stake or just their earned rewards? What percentage of the withdrawal addresses are restaking? What's the net inflow, outflow, and net flow to the staking address? These are all key metrics you need to be keeping an eye on in order to have a sense for how price will react immediately after Shanghai. But on a long enough time horizon, I think no matter what, it's a bullish outcome.
Ben McMillan, the CIO of IDX Digital Assets, says that from a structural perspective, the update is very good, as it's part of the continued improvement of the Ethereum blockchain. He doesn't expect to see a massive dumping of ETH on the market post-Shanghai.
First of all, it is earning a yield, and despite the fact that we now have more competitive treasury yields, the crypto community still does like the ability to earn, mid to high single digit yields on staked Ether. You also look at the amount of supply that's locked up. It's about 14%. So it's not nothing, but it's certainly not a huge number. A lot of the conversations we've had around the Shanghai update are, do you think we're going to see a sell-off after that? If so, how big? I wouldn't be surprised if, the Ether price responds a little bit, but we're certainly not expecting, a massive sell-off from all this kind of forced selling. It's in the context of, this is part of the continued series of upgrades, which is making Ethereum, that much more of a robust ecosystem with more that can host more development, more scalability, et cetera.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, so we'll see you then.